Transnet has flagged several indicators related to the material uncertainty of its ability to continue as a going concern. But the state logistics company's directors have expressed confidence that the challenges will be overcome and that the group will stay on its recovery path. In the firm's latest annual report tabled in Parliament, Transnet reported a net loss of 1.9 billion rand for the past financial year. And while that is an improvement on the previous period's loss, the company continues to face a 65 billion rand net current liability, breaches of debt covenants and ongoing operational challenges. However, the firm's positive outlook has been partly supported by government guarantees of 145 billion rand that it received after year-end and a jump in revenue. South Africa's manufacturing sector is sliding deeper into crisis. That's as infrastructure decay, import dumping and regional trade barriers drive the country's long-standing tile industry to the brink. This from Italtile. In a letter to shareholders, the company's CEO Lance Foxcroft stated that the country has become one of the least manufacturing-friendly economies, with energy insecurity, municipal cost spikes and policy uncertainty accelerating deindustrialization. The commentary comes after the closure of Johnson Tiles after 110 years operating in SA. This has left only 2 major local manufacturers and has cut 5 million square meters of annual regional capacity. Anglo American says the findings of Teck Resources' operational review are broadly in line with its own due diligence, and so it doesn't change the strategic rationale for the miners' planned merger. Teck's updated outlook indicates a slower ramp-up of its Quebrada Blanca copper operation in Chile. Anglo believes this is a more measured approach by Teck aimed at ensuring the long-term stability of the site's tailings facility. Dubai-founded Optasia plans to list its shares on the JSE through a 6.3 billion rand initial public offering. This would be the largest such flotation of a fintech group on the local exchange. Optasia describes itself as an AI-enabled fintech platform that provides microfinancing solutions and airtime credit solutions, and is the firm behind the airtime lending businesses of mobile operators Vodacom and MTN. The company's CEO, Salvador Anglada, says the IPO will allow the business to accelerate its growth. FirstRand is set to challenge the UK's Financial Conduct Authority. The lender says that the watchdog's proposals to settle the dispute relating to its motor financing case does not line up with a recent Supreme Court ruling as far as fairness is concerned. FirstRand alluded to the need to revise its 3.3 billion rand provision set aside for this matter post this legal action. The firm says the proposed redress scheme appears to have moved beyond the group's expectations of what can be considered proportionate or reasonable. Last year, the UK Court of Appeal found that FirstRand and other lenders arranged motor finance deals unlawfully, failing to adequately disclose commission paid to car dealers. And gold has pushed through $4,000 an ounce. For the first time, the rally has been driven by investors seeking safety from mounting economic and geopolitical uncertainty, alongside expectations of further interest rate cuts by the U.S. Federal Reserve. Commenting on the price, independent metals trader Tai Wong says that there is a lot of faith behind trading in gold right now, and so the market will look for the next big round number, which is 5,000. A generational shift is taking place at Dis-Chem. Saul Saltzman, son of the founder of the group, has resigned as executive director of the company. He steps down at the end of February next year after 19 years with the firm. Saltzman will, however, remain on the board as a non-independent, non-executive director and will continue contributing to the group's strategic direction and governance. Company CEO Roy Murray says that the shift from a founder-led retailer to a professionally managed healthcare group can help unlock value if managed well. In international news, BMW shares slipped today after the luxury automaker cut its 2025 earnings forecast, citing delays in US and German customs refunds and continued weakness in China as trade tensions cloud its prospects. Let's take a look at this package report for more.
Shares in European steelmakers rose in early Wednesday trade. Investors bought up after the European Commission proposed cutting tariff-free steel import quotas by almost half. It's part of a plan to preserve viable steelmaking in the EU. The bloc's steel producers are operating at only 67% of their capacity due to rising imports and US tariffs. The new measures are designed to push that up towards 80%. ArcelorMittal said on Tuesday it was relieved by the Commission's proposal. ThyssenKrupp also said in written statements it supported the plan, while Aperam welcomed the measures Wednesday. ThyssenKrupp said the Commission recognised the European steel industry and its associated value chains were in serious danger without effective trade protection. Industry data shows some 5.5 million jobs in Germany are directly or indirectly tied to the steel industry. JP Morgan analysts said the proposed import quota cuts could lower steel imports into the EU by 8 metric tonnes. They argue this could positively affect local steel producers' pricing power. But European car makers have concerns. The European Automobile Manufacturers Association warned about the inflationary impact tighter restrictions could have on steel imports.